My name is Farman. I'm one of the dealers here at Capital Spreads. I'm joined today by Bill Hubbard, a market expert. And we're going to be discussing some of the topics in the news. So Bill, the past couple of weeks we've had major falls in the indices.
Did you say the last couple of weeks or the last 24 hours?
Well, yesterday in particular,
Yes.
we had the big indices down almost 3%.
Yes.
Do you think this is the beginning of a
Yes,
market correction?
I think it is because, again, we had such a great run in the first 3 quarters of this year. And of course, you've always got the Nouriel Roubini's and the doom and glooms. Now, are they being justified right now? But I think what we're seeing is a number of factors that were taken individual, okay, that are all coming together, okay? Geopolitical risk. Well, we went through the first geopolitical risk, with Russia/Crimea in last June.
The market seemed to react well to it at the time.
Yeah, well, I mean, we did see oil go to 115.
Yeah.
Now we're seeing the geopolitical risk in ISIL or ISIS or whatever it is,
Yeah.
okay? Now we're also seeing an economic slowdown, which is probably correct. But I think, I guess I'm not in panic stage, but I think this Ebola virus is going to do a great deal of harm, to quote the consumer. We were talking about this earlier. Be prepared for probably a sell-off in airline stocks, in tourist companies and stuff. And people just say, well, maybe I'll go to Burma or Malaysia next year. Maybe I'll go to Margate for my holiday this year.
No, it's true. I have a flight booked to Morocco in November. Not sure I'm going to go now. Right. So we've got, say, the DAX. That was just shy of 10,000 a month ago. Today, 8,400, I think.
Well, I think one of the things that you saw in, let's go back to, the geopolitical risk. Forget Russia/Ukraine/Crimea. This, I think, is the extension of the sanctions, okay? The simple fact is, I know Russia's only 8% of German exports, but you compound 8% of this, that, and the other. Russia's not taking anything. And so what you're starting to see is, and I hope this will become positive with the Germans, adamant, we will not do QE, feeling that maybe we have to look at the rest of the European Union. And we saw that yesterday, okay? Again, as you were talking about the slight problem we had after U.S. retail sales. I mean, at one point, shortly after the retail sales, we had U.S. Treasury 10 years, Japanese 10 years, German 10 years, and UK 10 years, all trading at historically low levels.
It was a big move very quickly.
We saw very quickly there was a major divergence. Yes, Spanish had a good day, Italians had, but look, Greece backed up 125 basis points. Look at Latvia, look at Estonia, look at the lesser names. So we're seeing a major divergence within the European Union between the haves and the have-nots.
Yeah, that leads me on nicely to my next question. The deflation in the EU, do you think that's becoming more and more of a friend? We've got base rates at a record time low.
Yes.
Yeah.
Okay, I know we saw a situation today where we had the inflation rate drop from 0.4 to 0.3. But the key is, the European Central Bank looks at the five-year swaps rate, okay?
Yeah.
That dropped to 1.72%, the lowest in history. So therefore, we're talking about, forget where deflation is now. This is 5 years forward, and we're looking at the lowest level ever.
Yeah, it's pretty worrying.
Yes.
So we've got the VIX up at a recent high. Do you think it's a good time to buy some VIX futures, given all the uncertainty in the economy?
You mean the VIX futures for cough?
No.
or VIX?
The volatility.
Well, I think if you looked at any of the talking heads yesterday, they were all the gurus down on the floor of the New York Stock Exchange. Yeah, great time to buy, great time to buy, great time to buy. Well,
might have already missed the boat.
Yes, and also the simple fact is, as you said, we have had such a sizable sell-off, okay? 8, 10, 15%, whatever you want to call it. And I think all of the stock indices now are trading at their year-to-date low. So now, my feeling has always been, I would rather, if it looks like it is going to be a turnaround, I'd rather lose the first 1-2% return to make sure that I'm on solid ground. Because how many people, we saw the sell-off the first part of this, this month, went back in with both feet. And one of the things, again, let's try to explain to some of our viewers, the continued sell-off today is basically positions that are being forced to sell off. They've either gotten margin calls, they either shorted the stock yesterday and can't borrow it, so therefore they're having to sell into the market. So that just compounds. And we saw this, we really saw it yesterday with where the 10-year, in a matter of 20 minutes, the Treasury 10-year went from 2.23% all the way down to 1.86. Now, I've been trading bonds for longer than you want. I mean, in all my born days, I've never seen, and I mean, it did go down one tick at a time. It was 5 ticks, 10 ticks. And again, the key thing here is the marketability because of the new Basel III regulations, more and more institutions, and the marketability of the government bond market globally is down more than 75%. And you can see that there is no liquidity. There's no repo market. People are buying and selling, no volume. And if you look at a number of institutions over the past 6 months, away from Bill Gross and PIMCO, there are far fewer both bond traders and bond salesmen at the major houses 4 or 5 years ago. And that was, if it wasn't bonds, it was commodities. These are the two weak areas. And I don't need, you know who the names are, who are always the major bond players, okay?
So moving on slightly, we've got US earnings kicking off. Do you think some positive earnings from these companies is what the economy needs right now?
Well, I think what we need is, we saw this yesterday, okay? It was reported in Bloomberg late in the afternoon, okay? I mean, at a point when it came out shortly after the Dow was down 460 points and the 10-year was trading at 186. And basically it was not an overt conversation, but a conversation that Chairman Yellen, or Chairperson Yellen had made over the weekend, saying that she was still positive and confident about the durability of the U.S. economy. And even with the beige book, we got the same moderate and modest growth.
She was expecting 3%.
Yes, exactly. And I mean, that's the number. Excuse me, after what we've seen in this quarter, I have readjusted my level from 3.4 to 3%. So it's going to be quite interesting because I don't think there's really any major U.S. data today, but there are 5 speakers. And I think Yellen is one of those 5 speakers. So it'll be very interesting to see how Fed speak goes back. Even if you maybe a hawk or a dove, how you sort of realize that, you know, we've got to be, and then you go back to, you know, the comments that Stanley Fischer, the vice chairman, made over the weekend, where everybody said, well, you know, he says, yes, we're a local bank, and that's our job. The Federal Reserve's job is for the U.S. economy, but we have to be.
You always have to
happen. Yes, and I think so. It'll be very interesting to see, because Yellen's giving a speech tomorrow, but I mean, I think it's sort of a totally meanishless speech. We'll have to, so it won't be anything, but it'll be interesting to see what the Fed speakers say today.
Great. Thought we'd wrap up with a quick discussion on oil prices. So we've had them falling quite dramatically.
And falling
around 80s.
Yes.
Do you think this has to do with Iran, Saudi, Iraq all trying to
of it is. And also I think it's
bit of disorder and all
I
that.
think production is the highest it's ever been. And I think if you look at the Cushing, Oklahoma, I mean, I think inventories are like at a 28-year high. So you're seeing a slow growth, okay? You see it for the first time next year, the following. I mean, the U.S. will be a major exporter, but you just said, I think we may be seeing a little gamesmanship between Saudi, the Libyans, the Iranians, and the caliphates, okay? Because each one of these countries has a certain level, you know, whether it's $105, $102, $92, and basically, you know as well as I do, is it a situation where, on a positive scale, is now Saudi moving more towards a global, because I mean, Saudi is one of, I think, the 5 partners working with the US and the UK in reference to trying to work through this ISIS situation in Iraq, Syria and Turkey. So you know, I think you have to believe that that's what it is all of a sudden, maybe Saudi Arabia is sort of growing out of OPEC, but my feeling is it's only going to go lower. But now, for any of you people here in the UK that are anti-fracking, this will be very positive for you, because at this level, 85, 82, 78, all of a sudden, it's then not that profitable.
No, it's true.
To continue fracking. So
some are saying that Iran and Russia might be the two that suffer the most from the lower prices.
Russia, believe me, Russia is in deep, I can't say this on television. And I mean, you see how the central bank has had to intervene. So it really is a situation when we talk about the geopolitical risk. The economic sanctions are hitting Russia. hitting Russia very, very hard where it hurts. And I mean, you saw another situation yesterday, the dollar ruble all-time level. And I mean, even some analysts, as you would say, is it time to do some bottom fishing? Well, most everybody I know that follows the Russian ruble have put away all their fishing lines, so they're not going to do anything.
Best to stay clear of that
Yes.
one. Right, that pretty much sums it up for
Terrific.
today. Thanks for joining us, Bill, and thanks for watching.